Hey everybody, so today I got a very good one for you on technicals and we're just going to get right into it. So today was a crazy day and we are so oversold right now. So I'm going to show you just how oversold we are. So I'm going on the 1 year time frame. I'm looking at the Qs, and when I am looking at the Qs here, essentially we are below this Bollinger Band right here. So we're essentially over 2 deviations away from the 20-day moving average. Now, when I zoom out here, we're going to see something very interesting. We actually filled a gap today, and this gap goes all the way back to basically the end of October, early November in 2020. And this gap is a gap that we have never filled before, so we finally filled it today. We also happen to hit this bottom trend line right here. So this makes for a very interesting situation. We also have two gaps to the upside. Now keep in mind, we haven't even had our interest rate hike yet. I mean, that's going to happen on Wednesday. So we're seeing all this crazy price action, and it's just Monday. We're also below the weekly risk range on the Qs, which is 277 on 1 day. So it's times like this where, the risk to reward is really there. So it's also times like this where you could just see a straight up crash. Now, in my opinion, the volume was crazy, but it wasn't that crazy. We have seen higher volume before. So I'm not quite feeling that this is like that full-blown crash that we're going to have. I mean, we're already in a crash, but I'm feeling that this isn't the full-blown crash that we're going to see. Just look at the volume. I mean, we had higher volume here, we have higher volume here. I mean, this volume is not that much. I mean, 94.42 million. And just look at where we hit and look at that gap that we closed. Look at how oversold we are. Look at these gaps that we're leaving in the chart. I mean, I think the risk to reward is much, much higher to the upside. So that being said, we're going to go straight over to SPY and see what SPY is doing. So SPY is very similar situation. If I'm looking here, we touched this bottom trend line. And we're also very, very oversold. We are over 2 deviations away from this 20-day moving average. And this 20-day moving average is right here at 402.20. Also, the weekly risk range on SPY is 376.51 to the downside. We are slightly under that, as you can see. So where we are right now is lining up with this right here. If you watched my video yesterday, I was talking about us potentially hitting this, and I was like saying this is the worst case scenario, you guys. And we essentially saw that all in 1 day. I mean, I'm flabbergasted by today's price action. And I'm just thinking that there's more reward to the upside here. I mean, two gaps, two big old gaps, very oversold, hitting the bottom trend line. Now, look at how much downside we have from here. I mean, this is a risky situation. But also, look at the volume on SPY. I mean, some pretty high volume, but we've had some higher volume here before. So I would think that we would be breaking 200 if we were just having a full-blown crash. So maybe, maybe things get really, really ugly, and then maybe like the next day we just break down even further, and this is just full-blown capitulation. Who knows? But, right now I'm kind of thinking a little bit more optimistically, and that we could bounce from here, and that, we're more likely to just chop around and constantly follow this downtrend if we are going to these low levels here. So that's kind of my thoughts here. But I also do want to point out something that doesn't look too good. So I have this longer term trend channel that you can see. And as you can see right here, we broke into this longer term trend channel right here. So we could potentially just funnel into here just in like one strong move. So who knows? I mean, during this 2020 crash, we saw some crazy, crazy days where we were literally down like 9% in 1 day. I mean, go back and look at this price action. There were days where we were down 9%. So, I mean, I'm just a little worried here because the downside is so much, but I'm seeing all these signs that are telling me that we could potentially see a great bounce. And the one thing I'm a little worried about is what happens when we get to these gap fill areas. Like, let's say in the next few days we go straight back to 390. What's going to happen there at 390? Are we going to see a ton of bears just walk right in and then we just fade all the way back to this bottom trend line? I mean, who knows? I mean, it gets really risky. I mean, I would at least like to see us gap fill all of these. Then you could take some profit. You know, you could sell some bad trades that you're in, and then you could accumulate some cash. So let's go ahead and look at Apple as well. So with Apple, the lower risk range is 130.83. We didn't quite hit that. We're about $1 off. But one thing I do want to note on Apple is this candlestick. So this is a reverse hammer, and sometimes when you see a reverse hammer, it can indicate a reversal in the trend. Now, we saw something like this right here. So when we saw this reverse hammer right here, we saw this massive rally. And there's other instances where we saw a reverse hammer. So we see one right here as well, and then right there as well. So saw this reversal and then massive rally right here. So these little guys can be pretty tricky. So sometimes, you know, we see a massive reversal like right here, and other times, you know, it's just a trap. But I do think that these do indicate some sort of larger movement ahead. Also note that we are several deviations away here on Apple as well, over 2. The 20-day is at 143.83. The bottom of this band, which is 2 deviations away from the 20-day moving average, is at 133.62, and we're $1 away from the lower end of the risk range. We're also about I wouldn't quite say that this bottom trend line is as useful. I'm just going to take it out. So I do want to look at the VIX real quick too. So I was talking about the VIX and how we're kind of stuck in this pennant. Well, we broke out of that today, but we left this massive gap right here. Now to the upside, I mean, there is a good chance that the VIX could fade right here. But there also is a chance that the VIX could go all the way up to 37 again. And it can maybe even make it over back to this 40 area. So right around here, a little bit over 40. So this could get pretty risky here. So do watch out. Now with IWM, I'm going to go to max time frame. I think it's interesting where we are on the monthly candlesticks. So what it looks like right now is that we essentially just faded this entire move and we're right back to these pre-pandemic highs. Now, what surprises me is that IWM didn't make a new low today. See, that low was 168.46. We didn't quite cut that today. So to me, that's pretty shocking. I would have thought that we would have made a new low. Now, with the Dow, we have a very similar pattern, but with the Dow, we're ever so slightly off. Like, we're not quite hitting this bottom trend line, but we're like pretty darn close. We're 1% away. We're several deviations away from the 20-day. The bottom of this band is right here at 307.60. So we're a little bit less than 1% away from that. And when I go to the max time frame on the Dow, you can see that we're drawing this inverse cop right here. So we've essentially faded this entire move that goes all the way back to February of 2021. So things don't look too great here. We're also leaving these massive gaps right here. Let me throw on the moving averages on the Dow, see if we can see anything interesting. Nope, not really seeing anything interesting here, but that's basically all I have for my analysis, and I hope you guys enjoyed it. Definitely pay attention to tomorrow because I think it's going to be a crazy day. Today was pretty crazy, but we are literally right on those trend lines as you saw. So we'll see what happens. Hopefully it's some bullishness. And you know, hope you guys are protected in one way or another. So have a great one.